Hey, what's up guys? My name is Matt and welcome back to Crypto Kings. In today's video, we're going to be talking about exactly what Shiba Inu is doing. I know so many people have been asking me recently in my comments, where do you see SHIB going? What's going on with it? Let's get right into it, guys. So, if you have not already seen what SHIB is up to here, of course, folks, what we are essentially working with is a slight decrease here on the day, around 3% down here at the 55 mark. The market cap is still a little bit above 30 billion, which is always good. Nothing particularly tragic here. Obviously, this would increase as the price increases in the near future, so I definitely don't worry about this. In terms of volume, you're actually seeing around a 15% increase. Again, slightly more sell volume than buy volume, but regardless, that volume increase does look to be good because there is a little bit of volatility starting to enter the arena here. Again, not particularly volatile, again, not nearly as volatile as it was, say, a week ago, but it is a little bit more volatile than it has been over the past day or two, which gives us a little bit more of a chance, in my opinion at least, for some kind of bullish breakout. So when we take a look at our graph here and see exactly what we are working with, there are a few options, and like I've been talking about in a couple of my previous videos, the difficult part is the fact that when it comes down to it, no matter what chart you're looking at, there isn't an easy way to match it to any existing pattern because it doesn't want to fit within whatever an existing pattern is. There are a lot of patterns out there. A very big example, of course, is the cup and handle pattern, which you could still argue that this is doing. You could still argue that this is a cup and handle pattern, but the idea here is that this handle is perhaps a little bit longer than it should be, or that this cup is a little bit more V-shaped than it should be. So it's a little tough in a sense because you have to kind of round and make your best guess possible, even when the graph does not want to particularly, pertain to something like that. And that, definitely does take some skill, but it's definitely worth doing. Speaking of things that are worth doing, guys, check out Webull. Top of the link down below in the description. It is so easy to do. You guys want to get started trading stocks, crypto, including Shiba Inu, all that good stuff. You guys use my link and get some free stuff. Top of the link down below in the description, folks. I always do appreciate it. When it comes down to it, guys, again, what we are seeing here is what looks to be a couple of different patterns. So in a way, we do have that cup and handle pattern, which is, again, a little bit different than it should be, a little bit longer on the handle and a little bit tighter around the cup. But regardless, definitely could make the assumption that this does look to be a cup and handle pattern. Another pattern that I'm seeing here is the inverse head and shoulders pattern, which I've been talking with you guys a lot about previously in some older videos. But essentially, you have the head here at the bottom with a little bit of rounding, and then the two shoulders, hopefully at some point leading to a breakout. And you guys can see this could essentially be the head, and you have your shoulder here and your shoulder here. A little tougher to, again, make that distinction because this left shoulder is not quite as long as it should be, but regardless, you still do have the opportunity to say this could be an inverse head and shoulders pattern. And ideally, you want to in some way break out through the neckline here, and that is how you get to some kind of breakout. So you could say very much that this neckline here could be encompassed by around the 60-ish line. It's a little tougher to say, but I think it's definitely a safe bet to say that the early 60s is really where that major volatility comes into play. And of course, that is where, in my opinion, you could be seeing some form of potential breakout. Because in the end, every time it goes either above or below that, sort of low 60s movement, that is where a lot of volatility occurs, no matter what it is. When we sink below the 60s here on the third, you guys can see it causes a free fall all the way down to 43, and then we're in a similar instance right now. It goes above the 60s and it falls down to around the 55-ish mark. So every time it does that, it does seem to have kind of a counter action. So it seems if the low 60s really are a breaking point. It would be interesting as if we are able to replicate this kind of movement here. If we are able to replicate something like this, will it succeed in breaking out and heading up to a higher target, or will it unfortunately be rejected like it was here on the 5th where it heads down? That's definitely an interesting question, and it is definitely hard to say. When we check the relative strength index, which I always like to do, as you guys know, you all can see we are right around the middle here. A little bit ago, we were what you could consider oversold. So, it is considering that the 53, 54 mark is oversold. And I talked in my last video about this. I said, yeah, guys, 53, 54, that's really the lowest it should be going here, because if we are consolidating, if we are following the cup and handle pattern, if we are trying to prevent this from becoming a typical rounded top pattern, which would be something like this, and that is very bearish, if we are trying to prevent something like this from happening, of course, we don't want to be headed into the high 40s or, very low 50s. That's not really something we want to see here. And thankfully, we've been able to avoid that, it seems, over the past couple of days, which is always good. This line of consolidation here really from, you could say maybe 63, 64-ish and 55, 54-ish definitely looks to be pretty consistent. I definitely could see us just bouncing off in here for a little bit more if need be. I don't think this is particularly tragic if that were to happen. Again, the relative strength index is telling us that right now, all things seem to be normal, not particularly volatile. The volume here, again, is up a little bit on the day, but not an overwhelming amount compared to where it was. And you guys can see the differences in volume, man. I mean, the volume was just crazy here over in late October, and we had a little surge here on the 4th as well, this flash crash. So volume-wise, guys, it definitely does seem to be that we are increasing, but not increasing in a way that is concerning, but rather, I think the opportunity for some kind of bullish breakout if need be. So again, this movement here, this main movement here does, in my opinion, have a couple of characteristics of something that could be very bullish. Of course, the main characteristic being the fact you could, if you wanted to, draw a falling wedge around it. Again, it is a little soon to tell, but you could draw a falling wedge in this instance. You'd have no issues doing that. And of course, it does serve as the handle for the cup here. So you do have those two options there. So relative strength index, again, is saying that all things are looking good. If you are to check the Fibonacci retracement, you guys can see here, of course, is going to tell us exactly what we are working with in terms of the high and the low of the most recent run. So you guys can see we start here right around 52 with a high here of around 59. So you guys can see this one green candle sends us all the way up to the top. And unfortunately, at the top here at 59, it just gets rejected. Not really able to sustain itself above the 38.2% line either. That gets rejected as well. So right now, it looks as if the 61.8% line is in play. It is questionable as to whether or not we will be able to sustain ourselves above the 61.8% line. It is possible, definitely tough to tell, and this is, of course, right around 55. Realistically, we could fall to the 78.6% line, which would be all fine, and then it would be bouncing off of the 54. That is, again, a little bit on the lower side, but it still is possible if we saw something like this as part of this extended consolidation here. So, again, the 78.6% line wouldn't be bad. It is very possible. Even the 100% line here, all the way down here to around 53, would be okay. Again, that's very low, a little bit lower than it should be, but it still is possible and still would be acceptable, in my opinion, if we saw something like this here. I definitely could see that kind of priming for some sort of breakout. So with that being said, guys, thank you all so much for watching. Make sure to drop a like and subscribe if you guys are new for more daily SHIB vids. Make sure to let me know down below in the comments, guys, where you see Shiba Inu in around a week from now. Do you agree with me that this does, mostly look like an inverse head and shoulders pattern here? If you guys do, definitely let me know. If you guys see something different, let me know of that as well. I'm always looking forward to hearing you guys' input. Make sure to drop a like, sub for more daily SHIB vids. My name is Matt. See you guys on the next one. Peace.